Hey Bowtie Nation, Joseph Hogue here, and a quick informal video that I guarantee will make you a better investor. And something that caught my eye recently was an interview with Cathie Wood of ARK Invest, saying her funds should quadruple in the next 5 years, multiplying your money 4 times on those innovative companies and the high-flying stocks. Now that said, those same growth stocks haven't helped the ARK Innovation Fund, now down 24% so far this year, but she was right about her totally outlandish call on Tesla at $1,000 each like a year ago, and the fund has still doubled over the last 2 years, so I'm not quite ready to completely write off that 4x claim. But then hers isn't the only big talk out there by analysts and pundits either, right? You see these eye-popping, headline-grabbing promises like penny stocks to 10x your money and stock picks to double your money all over the place. So you've got to be skeptical when you see these and know which could lead to a bunch of money and which could just be a bunch of BS. So in this video, I want to show you how to double check those big promises in the market, how to know if these market experts are full of promise or just full of something else. And here I'm going to use Cathie's 4x statement as an example, not because I'm trying to throw shade on her or the team over at ARK Invest, mostly because I'm over the age of 30 and have no idea what throwing shade even means, but it's just to show you how to question these crazy get-rich headlines, how to double-check their numbers so you can call BS when you need to and only invest in the best ideas. I'm going to show you how to do that kind of quick back-of-the-envelope analysis that you need anytime you see these kinds of promises. So let's get started, but first, I've got to send that special shout-out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. So now just looking at this article again, Cathie Wood says the shares of her ARK ETFs, and we're going to focus on the ARK-K, the ARK Innovation Fund, but she's saying all her ETFs could quadruple over the next 5 years, which is a huge statement, over the next 5 years, which is really audacious. Basically 32% returns in each of the next 5 years on a market that's already really expensive. So let's see how she's explaining that and how the funds get there. And I understand she has to talk up the fund and calm down investors after that 24% loss this year, underperforming tech stocks in the NASDAQ by more than 50%. So now you get statements like where she says, I get very unsettled when people selling at what I know are bargain basement prices, and our optimism and confidence has increased, not decreased. It's ideas like this that kind of make me think she's doing more marketing than actual analysis here, but we're going to get into the actual analysis of how this fund gets to that point. Now, the one piece of real guidance she does give with her analysis, though, is kind of a sanity check. This 4x claim is that all our stocks, or most of them, will have FANG-like multiples. Now, what she's talking about here are the price multiples, like the price to earnings and price to sales ratio. So now, for example, if you look at shares of Tesla, the stock is trading right around $1,000 a share lately and is right around a market value, a total market value or market cap of $1 trillion. And we can come down here to the income statement statistics, and we can see that it has booked $46.85 billion in revenue over the last year. So if we take that $1 trillion market value, the market cap of the company, so we'll go 1060 in billions there, divided by 46.8 billion in sales, we get a price to sales ratio of 22.6 times. So investors here are paying, in shares of Tesla, are paying $21.6 for every dollar in sales the company makes. That's important because we know those fast-growing companies ARK holds in its portfolio. The stock's growing sales by 40 and 50% a year with stock prices in the stratosphere at 50 times price to sales. We know that as these companies mature, then those price multiples will come down. And these stocks will start trading more like those older growth companies, those in the FANG group, which are the Facebook, Apple, Amazon, Netflix, and Google. Still growth companies, but with revenue growth that's coming down a little bit, and investors that are paying less for the shares on those price to sales and price to earnings basis. So what we can do here, just to sanity check this claim of those 4x returns, is we can look at the price to sales multiples for those FANG stocks, and how much investors are willing to pay for every dollar in sales of those stocks. Then what we can do, we can take those multiples and see how big the stocks in the ARK Invest funds would have to grow to produce that 4x return and if we believe it. And again, I just want to walk you through some simple analysis that anyone can do that is going to help you make up your own mind. Really kind of fact check these numbers by analysts, or these statements by analysts and fund managers. So what we need to do is to sanity check this. We need to find the price to sales ratio of the FANG stocks, because remember, she does say that the stocks in her funds will become mature growth companies and will have price multiples, so those price to sales ratios similar to those FANG stocks. So a more normal price multiple than some of those in those larger growth stocks, compared to where some of the price to sales multiples of these smaller growth, these faster growing stocks held in the ARK Innovation Fund. Now, once we have those average price multiples for the larger, the more mature growth companies, then we need to find what stocks are in her fund. And here we're going to concentrate on the top 6 holdings in her flagship fund, this $25 billion ARK Innovation ETF. That's ticker ARKK. And for any fund, any ETF on, you can go to its website and go here to holdings, and it's going to show you exactly what is in the fund. It's a great way to kind of mine an ETF for its top holdings to see what it's investing in and whether you want to invest in individual stocks or in the fund itself. And within the top fund holdings here, you can also download this to get the full holdings, but we'll just look at the top 10 here. And within these top 10 holdings, we see that really the top 6 are 38% of the fund. So if her ETF here, if the ARK-K, the ARK Innovation Fund, is going to quadruple over the next 4 or 5 years, then it has to do it with these 6 stocks, right? If these are 38% of this fund, you know, you've got Tesla at almost 8% of the fund. Roku is almost 6% of that fund. If this fund is going to do so well over the next 5 years, it's going to be these stocks that have to take it there, because, you know, all the other 50 some stocks within this fund only amount to another about 60% of the total assets. So without these stocks, these top 6 stocks really going far, the fund just isn't get there. So what kind of data do we need to really build out this back of the envelope analysis on this statement of that 32% annual return, or the 4x returns on this ARK fund? We're going to need the price to sales ratios, right? Because we're comparing the current price to sales ratio of those top 6 stocks in the ARK Innovation Fund. We're comparing those to the FANG stocks. We're saying that those price to sales ratios of these fast growing companies in the ARK fund are going to eventually look a lot similar to the older FANG stocks. We want the market cap of these, and remember, the market cap is the total market value of all the shares held by investors, right? So if she's saying that the fund or these stocks are going to 4x over the next 5 years, then that market cap, the total market value of those shares, should increase by 4 as well. So what I did here, we're going to find the market value of each of these stocks, and what I've done over here, I've just multiplied that by 4. So this should be the market cap of these 6 stocks in the next 5 years. So let's go ahead and do that, and I'm going to fill out some of this data. I won't make you sit through all of the data, but I'm going to fill some of it out and show you how I found this. So for any of these, I can go to Yahoo Finance, and we can look at the statistics to find the price to sales ratio for any of these. So we'll go here to Meta Platforms first, ticker FB, that's the old Facebook, and we find a price to sales ratio of 8.5%. We can go over to our chart, type this in, 8.5, and then go to Apple. So we'll go to Apple here and do the same thing, go to statistics and find the price to sales ratio of 8.27, 8.3. We'll round these up just to make it easy here. So I did that for all 4 of the FANG stocks here, and they're actually all very similar, other than Netflix. Netflix has a little bit higher ratio, price to sales ratio of 9.7, but the rest are fairly close, and the average of all 4 is 8.75, so 8.7. So remember, Cathie Wood is saying that even though her stocks are going to grow by 32% annualized over the next 5 years, that price multiple, the price to sales ratio of those stocks is going to come down and is going to look a lot like these FANG multiples. So what we know is we want to get to a point where the market cap of these stocks right here is 4x, and then we can back into what kind of sales they need to get there. So now we're going to do the same thing here. We're going to find the price to sales ratio, the current price to sales ratio of these top 6 stocks in the ARK Innovation ETF. So now using that same process, going to Yahoo Finance, finding the price to sales ratio under the statistics tab, I was able to find the price to sales of each of these 6 companies. And you can see that they are very much higher than those old school growth tech companies, right? We found of the 4 FANG stocks, so Facebook, Apple, Netflix, and Google, had an average of 8.75 times on a price to sales basis. With Tesla, Coinbase, Unity, Teladoc, Roku, and Zoom, we're looking at an average of almost 21 times on a price to sales ratio. So more than twice the price to sales valuation of these older FANG stocks. Okay, so now that's going to be important. But next we want to get the revenue of these companies and the market cap. Again, remember the revenue, the sales. We're gonna be estimating what kind of revenue these companies need to grow to if they're gonna 4x their market return or 4x their size. So provide that 4x market return, as well as bring that price to sales ratio down to something in line with the FANG stocks. And we're going to use that as kind of a sanity check on this statement. So for revenue, again, I can just like we did with Tesla earlier, I can go through, I can go to the statistics tab on a stock's homepage and scroll down here to the income statement, and I can find how much in revenue or how much in sales that company has booked in the past year. That's TTM, as trailing 12 months. So $46.85 billion here. We'll type that in, 46.85, and that's going to be in billion. And then the market cap, that's the total value of the shares, in the market. We can go back up here to valuation measures. It's going to be the top line. Market cap intraday is $1.02 trillion. So we'll put that in our spreadsheet. 1020, if it's in billion, it's 1,020 billion. And now I'm going to fill this out for the rest of these. Okay, so I filled the revenue out for each of these as well as the market cap. And it's already populated with some of these others, and I'll show you what I did here. So remember, Cathie Wood is saying that the stocks in her fund are going to 4x over the next 5 years. So if we take that market cap, which is the current valuation of all the shares in the market, the total market value of those shares, and we 4x that, we can get basically a company size estimate for over the next 5 years. Now, we also know that she said that over those 5 years, the price to sales ratios of these companies, of Tesla, Coinbase, Unity, Teladoc, those are going to look a lot more like these old school growth stocks in the FANG index, right? Which, that means those price to sales ratio is going to come down to 8.75, 8.7 times. Okay, so if we know the company is going to be valued at, for example, she's saying that Tesla is going to be worth $4 trillion over the next 5 years, and we know that she's also saying it's going to have a price to sales ratio right around 8.7, right? It might be a little bit higher, maybe 9, maybe even 10 times. But if we're saying it's going to be averaged out with those FANG stocks, an 8.7 times price to sales ratio, then it would need sales of $468 billion. Okay, that's just the market cap, the expected market cap to 4x those shares divided by 8.7, which is the price, the expected price to sales ratio, $468 billion. Now, the reason why we got the current revenue, because we want to know how much it would have to grow that revenue over those 5 years, right? So if we know if Tesla booked $46.85 billion in revenue over the past year, and it's supposed to get to $468 billion in the next 5 years to justify this valuation, it's going to have to 10x its sales, okay, over the next 5 years. And of course, it's auto-populated with this in the, for the rest of those. We'll just look at Coinbase as another example. So Coinbase right now has a price to sales of 11.44 times, right? Quite a bit lower than Tesla or Unity Software right here. Coinbase has booked almost $6 billion in revenue over the past year, $5.92 billion in revenue. It's got a market cap of $82 billion. Okay, the company is worth $82 billion. That's the total value of all the shares traded. And if that stock is going to 4x in the next 5 years, it's going to have to be worth $328 billion. Or in the next 5 years, if it 4x's, so 4 times this current market cap is $328 billion. Now, for it to get there, you know, if it's then trading at a price to sales basis of 8.7 times, okay, which again, this is the average of those FANG stocks. If it's trading at that 8.7 times price to sales, then to reach that $328 billion market cap, that total market value, it would have to be booking a little over $37 billion in sales. Now, if it booked $6 billion in the last year, that means it's going to have to 6x its sales over the next 5 years. Okay, that's the sales that are expected in the next 5 years divided by the current sales is this column K here, and that represents 45% annualized growth. Okay, that's 45% growth every year over the next 5 years. And what we're going to do here next is really just kind of look at past revenue growth of these companies and determine, okay, is 58% annualized revenue growth realistic for these companies? You know, is 33%, is 88% revenue growth? So now if we want to determine if this annualized growth needed to get to that 4x, if that's realistic or even possible, then we need to know how fast these companies have been growing in the past. And we don't want to use just a 1-year revenue growth, see how they've grown over the past year. We want to use a 3-year revenue growth, right? Just to make sure that we smooth out any good years or bad years and find their true revenue growth over a longer period. And we can do that by going to a couple different ways. We can go to the stock page on Yahoo Finance. We can go to the financials, and that's going to show us the total revenue for each year of these companies. And we can do a 3-year, a 3-year growth. So from 2017 to 2020. One way we can do this is go here. So if we go, Tesla had $31.536 billion in sales in 2020. If we divide that by 11.758 billion in 2017, now that's 3 years. If we want to get an annualized number, we just click on this X to the Y and we go 0.33. That gives us an annualized for 3 years. And that tells us Tesla has grown its revenue by 38% over the 3 years from 2017 to 2020. So we'll come back in here, we'll put in 38% there, and then we'll do the rest of these numbers. So now I've got the 3-year revenue growth for each of these companies, and actually for Coinbase it was only a 2-year, but for the rest of these that's a 3-year annualized growth. So how fast have they grown their sales over each year of the last 3? And you can see that several of these are under what is needed to 4x those stocks. So Tesla needs, if it's going to 4x that stock, it needs to grow its revenue by 58% a year over the next 5 years. But it's only grown by 38% over the last 3 years. So it is going to have to find a major growth driver over the next 5 years to do that. Some of them have been quite a bit lower though. You know, if you look at Coinbase has more than doubled its revenue every year over the last 2 years, and it only needs a 45% growth, annualized growth over the next 5 to be able to hit that 4x return. Look at some of these others. Unity Software has only grown by 38% a year, but to hit that 4x goal, it's going to need to up that to 88%. Now, how realistic is that? And I'm going to make some, I'm going to look at some other data here in a little bit to kind of work through these, how they could do that, or if it's even realistic. But now we want to just kind of look through these and make our own analysis, you know, look at some of the things that would make it hard for those companies to reach that level, some ideas that maybe make it more likely for them to reach that level. So here I've just taken some notes on the data and the research that I've done, the data that I've seen, and some of the ideas in these. So if we're looking at Tesla booked $47 billion in sales over the last year. It needs to book $470 billion in year 5 for it to really 5x or 4x that stock. You know, that's a 58% annualized return or annualized growth on its sales. And what you have to think about here with Tesla is what percentage of the total auto industry would that be? You know, if it's going to book $470 billion in sales to justify this valuation here in 5 years, you know, the 2021 sales for the top 10 car makers was only $1.5 trillion. Okay, so if we're saying that Tesla is then going to grow, is almost going to sell $500 billion in sales, in revenue in year 5 here, that would basically be a third of the entire global car market, okay, which is really unlikely for anyone's stock to do. Now, a lot of Cathie Wood's valuation thesis for Tesla is in the rideshare component, okay, the autonomous taxis and rideshares, okay. In fact she's saying a bull case is $4,000 a share by 2025, expected value around $3,000, and a lot of this is based on the idea that it moves into not just electric vehicles where it's already at right now, but it moves into autonomous ride-hail revenue. Okay, you can see in her, in her expectations here, that's 327. I'm assuming this is billions in revenue in year 2025. Okay, so that is a big chunk of its revenue right there. For Coinbase, now this is going to be harder to analyze because we really don't know the total industry sales across all the cryptocurrency platforms, right? We've got sales data for Coinbase because it's public, but we don't have revenue or industry sales for the rest of the cryptocurrency platforms. Now, but that it would still be ginormous growth in crypto, right? For Coinbase alone to 6x its sales to $37 billion from just $6 billion over the last year. It's a 45% annual growth rate. And one thing that I've been saying about Coinbase and about cryptocurrency itself over the past few months, well, really since Coinbase IPO'd, is if cryptocurrency is going to have that kind of growth, why not just invest directly in the cryptocurrencies, right? If Bitcoin, if Ethereum, if a lot of these other cryptocurrency tokens really do that well over the next 5 years, you're going to see a lot higher returns in those than you are going to see with Coinbase. You take some of these coins, even the larger ones like Ethereum, it is 4 and 6x its return just in the past year. Okay, and we're talking about these numbers to 4x Coinbase's return in the next 5 years. Okay, so if you believe in this upside for cryptocurrency and the industry, I think you invest in the cryptocurrencies themselves rather than maybe Coinbase stock. Now, for something like Unity Software here, okay, for it to have grown by 38% over the past 3 years, 38% a year over the past 3 years, and then to jumpstart that revenue to 88% a year for 5 straight years, that would have to be a major disruption. Okay, so we would really want to look into what management is saying about its market size, about different markets that it thinks it can sell to, because for it to be able to grow sales to $23 billion at the end of 5 years versus just $1 billion in the last year, it would have to really be a major disruption. Now, looking at Teladoc, this is probably the most realistic of the 6, and I actually do own shares of Teladoc. I love the company. I love the future of that virtualized healthcare, and I think it's a big part of how we'll be using healthcare in the future. And if you look at some of these numbers, if you look at this number, it's grown those revenues by 64% annually over the last 3 years. And to 4x the shares, it only needs to do 33% annualized return over the next 5. Now, I'm not saying that it gets there. I'm not saying that it's going to book those 33% annualized growth over the next 5 years, because obviously it probably won't have the benefit of having a lockdown pandemic to drive sales. But it is much more realistic than some of these other growth projections. Now, looking at Roku stock, and I know this is an extremely popular stock. It has made people a lot of money, especially on that 50% sales growth annually over the last 3 years. It doesn't quite need to do that. It only needs to do 41% over the next 5 years, 41% a year. But again, I don't know that this is entirely realistic, because obviously it was a first mover in that streaming space. But how different is it from others right now? Okay, we've got a streaming service on our TV, and I compared that to Roku, and it looks exactly the same. So I don't know that there is a lot of competitive difference, in this in Roku with some of these other streaming services to have that kind of growth, to see that kind of 41% revenue growth every year for the next 5. For Roku. For Zoom here, I love Zoom and I use it all the time. I was on a podcast just yesterday and we use Zoom. I connect with most of my meetings on Zoom, but I'm not sure how it gets to $28 billion in sales, okay, from just $4 billion last year. I've always only use the free version. Most of the people I know only use the free version. So it's going to have to come from that enterprise valuation. And honestly, it has grown by 120% sales growth over the last 3 years, 127% each year. It only needs to do that 50%. So this isn't outside the realm of possibility, but it is definitely going to have to up its monetization game. Maybe even moving some of those free accounts into paid accounts. So now you're looking at these numbers and you see what kind of sales growth this is and what kind of annualized growth is it for the stocks. Just doing this kind of quick back of the envelope analysis for these stocks to 4x their stock prices and come down to those FANG-like price multiples, they really have to book some really spectacular sales growth. But is that realistic? That's what you need to ask yourself as an investor. Click on the video to the right for the 7 stocks that will drive the revolution in electric vehicles. 7 stocks nobody is talking about yet. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.